Everyone watching this market right now can feel it. Something huge is shifting. Ethereum is lighting up the charts. Liquidity is flying in from every direction. And the entire crypto space is bracing for what could be one of the biggest rotations of the decade. And for holders of both ETH and XRP, this isn't just exciting, it's historic. The signs we're seeing right now could mark the moment that changes the balance of power in crypto forever. This is not financial advice. Ethereum has smashed through resistance after resistance, recently breaking $4,000 and now hovering near $4,200. That move didn't just beat Tom Lee's old price target, it obliterated it. Wall Street is piling in, funds are launching, staking is expanding, and liquidity is pouring through the pipes faster than it has in years. But here's what most retail investors don't yet realize. Whenever Ethereum becomes the focus of the market, the rest of the altcoin field doesn't just follow, it detonates. And sitting right at the front of that line is XRP. Before we dive into how that rotation could unleash the next explosive XRP rally, I want you to know about something that'll help you understand this whole setup on a deeper level. In the pinned comment below, you'll find the XRP Millionaire Blueprint, a complete breakdown of how major liquidity cycles form, how to spot them early, and how to position before they ignite. It includes the full document, visuals, and video training built to show you the exact framework that top-tier investors use. Go check it out in the pinned comment while it's still available. Now let's get back to what's really happening with Ethereum and why XRP is sitting in perfect position right now. Institutional capital is surfing the ETH wave. Hedge funds, treasuries, and whales are all moving in sync, using Ethereum as the launchpad for broader crypto exposure. They ride it up, harvest profits, and then rotate that liquidity into the next high upside asset. It's a rhythm as old as the market itself. And if you zoom out, you'll see the pattern forming again exactly the same way it did in 2017 and 2021. Tom Lee recently said, Ethereum is having its Bitcoin 2017 moment. Wall Street finally has its safe crypto play, fully compliant, fully auditable, and with ETF pipelines already forming. But that very success is what sets the stage for the next move. Because when that institutional money finishes its ETH run, it doesn't go back to dollars. It looks for the next opportunity, the asset with the best combination of utility, regulation, and scalability. And that's where XRP enters the picture. Remember, December's setup was identical. Ethereum hit a key level, started to plateau, and within days, capital began rotating, not trickling, pouring into XRP. The market moved like a tidal wave. This time, the backdrop is far larger. ETFs, compliant infrastructure, tokenization pilots, and on-chain liquidity corridors ready to handle real institutional volume. Tom Lee also highlighted how ETH's treasury model, big corporate entities holding and staking Ethereum as yield-producing reserves, mirrors what MicroStrategy did with Bitcoin. In just 5 years, MicroStrategy locked up 3.2% of Bitcoin supply. Now imagine that same dynamic happening 12 times faster for ETH. That's what's driving the current spike. Wall Street loves the structure because it's clear, legal, and easy to onboard. But here's the catch. While Ethereum is now the face of compliant crypto, it's not the most efficient settlement layer. Speed, cost, and scalability still matter. And that's where XRP's technology crushes the competition. Transactions settle in seconds for fractions of a cent across borders on a ledger built specifically for institutional-grade liquidity transfer. That efficiency isn't just a nice to have, it's what global finance actually needs. Banks, payment providers, and clearinghouses can't run trillion-dollar pipelines on slow, congested networks. They need precision, speed, and reliability. That's the DNA of XRP. Now combine that with what's coming next, the potential approval of XRP spot ETFs. Multiple filings are circulating, and the talk behind the scenes points to a possible green light as early as September. When that happens, everyday investors will be able to gain exposure directly through traditional brokerage accounts, the same way they can buy Bitcoin and Ethereum today. That's the ignition switch. Because once the ETF launches, liquidity doesn't just enter, it compounds. Institutional desks see retail volume exploding and accelerate their own allocations. The loop feeds on itself. ETH saw it, BTC saw it, XRP is next. Ethereum surge right now is necessary. It's a signal that the market is heating back up, that money is flowing, that risk appetite is returning. But the key difference, this cycle, is speed. Back in 2017, rotations took weeks. In 2021, they took days. In 2025, with 24-hour on-chain analytics, sentiment algorithms, and global trading access, it could take hours. One headline, one rotation trigger, and capital can flood from ETH into XRP before the average investor even opens their portfolio app. That's why these next 30 days matter more than most people realize. Ethereum's run has already broken expectations, and if it keeps climbing toward the $4,500 region, that rotation window will open fast. Historically, the moment ETH begins consolidating after a breakout, XRP ignites. Let's take a look at the core mechanics behind that. ETH's staking ecosystem ties up supply, reducing available liquidity. When traders begin taking profits, they release massive pools of capital all at once. Those funds look for a new asymmetric bet, something that hasn't yet pumped, something that still offers regulatory clarity and enterprise use case momentum. XRP fits that bill perfectly. Meanwhile, Ripple continues expanding real-world corridors with banks, remittance firms, and fintechs, activity that directly adds volume to the XRP ledger. So when liquidity arrives, there's actual utility to absorb it. That's the key difference between hype cycles and structured rotations. Utility provides the floor, speculation provides the fuel. As Ethereum keeps dominating headlines, the smart money is already mapping the next phase. They know the flow won't end with A. They know the setup for compliant settlement assets is stronger than ever. And they know the window to front run, that reallocation is closing by the day. The same traders who frontar, ran Bitcoin ETFs, and rode Ethereum through $4,000 are now positioning quietly in assets with real transaction throughput. And XRP's metrics are leading that short list. Transaction counts, wallet growth, and on-chain liquidity ratios have all been building quietly while attention fixates on ETH. That's exactly what happens before a breakout. And remember, markets don't move gradually when sentiment flips. They move violently. The switch isn't a gentle curve. It's a snap. 1 week, ETH is the only story. The next week, every feed is flooded with XRP charts breaking resistance. That's how rotations feel in real time. And the timing element right now couldn't be more precise. Every on-chain metric and macro signal is showing the same picture. Ethereum's rally is nearing saturation, and capital rotation pressure is building. It's the same structure that unfolded at the tail end of the 2017 bull phase and again in mid-2021. Liquidity first consolidates in the dominant asset, in this case ETH, then cascades through the rest of the market. But unlike past cycles, this time XRP isn't starting from a position of uncertainty. It's starting from clarity, compliance, and integration with global institutions. That clarity is everything. In previous cycles, XRP's biggest headwind was uncertainty about whether it would be treated as a security. That cloud kept the big players hesitant. Now that obstacle is gone. The legal clarity Ripple achieved has opened the floodgates for institutional consideration. So, while Ethereum is the current safe bet for Wall Street's crypto exposure, XRP has become the strategic bet, the one that can actually underpin the financial rails these institutions want to build. Think about what that means for the next liquidity wave. When hedge funds and corporate treasuries start rotating out of Ether, they're not going to scatter their allocations across meme coins. They'll look for assets that meet their internal compliance standards, have real-world settlement speed, and align with the next phase of tokenized finance. XRP fits all three. Ethereum's momentum is powerful right now because of the ETF effect. The ETFs have been creating consistent buy-side pressure, pushing demand far above what organic usage alone would produce. But as that stabilizes, as the novelty fades and inflows normalize, the market starts seeking growth elsewhere. That's when the rotation accelerates. The ETH chart begins to flatten, profits get locked in, and liquidity goes hunting for the next asymmetric setup. Historically, those rotations are fast and violent, and that's why these next few weeks are so critical. Ethereum supply dynamics have already started tightening. Gas fees are fluctuating, and staking yields are compressing as participation rises. That's usually a top of cycle indicator. XRP, meanwhile, has been quietly tightening its own supply structure. Large addresses are accumulating, exchange reserves are shrinking, and transaction volume is increasing across key corridors like Europe, Asia, and US Latin America. It's the perfect setup for a liquidity pivot. Institutional traders aren't waiting for a public signal to act. They operate on anticipation. They're tracking the same data retail never sees: options, open interest, derivatives, funding rates, wallet clusters tied to major funds. And what those data sets are showing right now is that heavy ETH profit taking is beginning to occur under the surface. That's not speculation, it's pattern recognition. The same thing happened in 2021, right before XRP went vertical. But the mechanics this time are different. The global liquidity environment has changed. We now have instant settlement rails between major exchanges, 24/7 clearing systems, and a far deeper derivatives market. That means when the switch flips, it won't be a slow crawl, it'll be a cascade. The capital flow velocity today is 10 times faster than it was 4 years ago. And here's where things get really interesting. XRP doesn't even need Ethereum to crash for this to happen. All it takes is a pause. Once ETH begins ranging sideways, even slightly, the algorithms that control capital allocations start to rebalance automatically. Portfolio managers have models that look for rotational efficiency, meaning as soon as ETF's performance curve flattens and another asset shows superior momentum, liquidity automatically migrates. That's built into the system. Now XRP just needs to be next in line when that trigger fires. The reason that probability is so high is because XRP has something almost no other top 10 asset has: a clearly defined utility narrative that ties directly into the macro trend institutions care about. Real-world tokenization and cross-border settlement. We're talking about multi-trillion-dollar markets in payments, forex, and bond clearing. Those are not theoretical numbers. Those are the largest financial flows on Earth. Ethereum might be the platform for tokenization, but XRP is the bridge for settlement. That distinction is what draws serious capital. Tom Lee mentioned in his analysis that ETH's treasury adoption mirrors how corporations manage Bitcoin as a reserve asset. That's good for price support, but it also means liquidity is getting locked up. XRP, in contrast, thrives on movement. Every transaction, every cross-border transfer, every liquidity corridor expansion increases velocity. That's why a rotation from stagnant staking yields toward active settlement networks makes perfect sense. And let's not forget the macro side. As global central banks keep experimenting with digital currencies, interoperability becomes the next major challenge. The world doesn't need 50 separate CBDCs that can't talk to each other. It needs a neutral bridge asset that can settle value across all of them. Ripple has positioned XRP precisely for that role. This isn't an afterthought, it's the foundation of their entire ecosystem. So while Ethereum is attracting attention for its compliance narrative, XRP is quietly aligning with the very architecture of the future financial system. When large investors see that, they start to model potential exposure, not just based on speculation, but on future settlement dominance. And when that narrative reaches critical mass, it becomes self-reinforcing. That's how every major rotation starts. Narrative plus timing plus liquidity. Ethereum provides the narrative and liquidity. Right now, XRP owns the timing window that comes next. Look back at the charts from the previous rotations. Each time Ethereum peaks, XRP's volume profile surges right after. It's not random, it's a liquidity feedback loop. Traders call it capital migration. The largest funds never stay concentrated in one product. They spread risk. That's portfolio management 101. If 10% of ETH ETF capital rotates into XRP ETFs, even at current valuations, that alone would represent billions in inflows. But that's just the start, because once retail access opens up, the psychology shifts. Investors who missed the ETH run will look for the next ETH. They'll see XRP's efficiency metrics, its enterprise adoption, its clear legal standing, and realize it's not just another altcoin, it's infrastructure. That wave of retail confirmation triggers the next institutional step up. Institutions follow volume, and volume follows accessibility. All of that aligns perfectly with the macro environment we're in: rising digital asset legitimacy, expanding ETF infrastructure, and global payment rails being re engineered in real time. XRP sits at the intersection of all three. So when we say the rotation could be historic, it's not an exaggeration. You're looking at a setup where structural capital, narrative capital, and regulatory capital all converge on one point. That doesn't happen often. And when it does, the results rewrite market history. And here's something most people aren't paying attention to: the velocity of market narrative turnover. Back in 2021, it took months for Ethereum's narrative to cool before capital flowed into the next asset. In today's social-driven algorithmic environment, it can happen within days. All it takes is one momentum headline, one ETF approval, or one liquidity corridor announcement, and the floodgates swing open. That's why XRP's positioning is so strategic. It's not trying to compete with Ethereum's ecosystem, it's complementing it. As ETH tokenizes assets, XRP settles them. As ETH builds the stage, XRP runs the payments. The two aren't enemies, they are the sequential phases of the same liquidity cycle. Ethereum absorbs attention first, XRP captures performance next, and every signal right now is flashing that we're entering that second phase. Ethereum dominance has spiked to near cycle highs. Historically, a rotational trigger. Altcoin market cap, excluding ETH, is forming a base exactly where prior reversals began. XRP's relative strength index has reset to accumulation levels. The technical and fundamental setups are perfectly aligned. All that remains is the timing of the trigger. Once Ethereum begins consolidating, once those massive profit-taking flows begin, XRP will be standing in position. Deep liquidity, regulatory green light, institutional on-ramps ready. The fuse is already lit because the fuse really is burning now. Ethereum's strength has drawn in massive liquidity. And that's not bad news, that's the signal. The next stage is almost ready. You can literally track it in real time. Exchange inflows on ETH are rising as some early whales begin taking profits. Derivative funding rates are tightening, and spot buying pressure is flattening. These are the early footprints of rotation. It's how markets move when the big players start shifting capital. They don't announce it, they reallocate gradually until momentum flips. The same funds that loaded up on Ethereum when it was under $3,000 are now quietly looking for the next asymmetric setup. Something with a cleaner regulatory path, a defined real-world purpose, and a lower relative valuation. XRP checks every one of those boxes. The mechanics behind that shift are straightforward. Institutions use automated systems to maintain performance targets. When one asset begins to show diminishing returns and another shows growing relative strength, those systems automatically rebalance. You can think of it like a seesaw of capital. As Ethereum's curve flattens, XRP's side begins to rise. It's not emotion, it's algorithmic logic. And this time, XRP isn't starting from behind. It's entering the stage with real momentum, regulatory clarity, growing on-chain volume, and ongoing global partnerships that turn speculation into infrastructure. Ripple's integrations across corridors in Asia, Europe, and the Middle East are expanding faster than ever. And those corridors are built on the XRP ledger. That's genuine transaction-based demand, the kind that sticks around long after the hype fades. Now, combine that with the ETF catalyst. If Ethereum was Wall Street's warm-up act, XRP could be the main event. Spot ETFs transform access. When average investors can buy XRP exposure through the same platforms they use for Apple or Nvidia stock, adoption becomes frictionless. That's when liquidity compounds. Retail flow drives volume. Volume signals demand. Demand attracts institutions. And institutions amplify the move. It's the same domino chain we saw play out for Bitcoin and Ethereum, only this time the underlying asset has a clearer use case. One of the biggest misconceptions in crypto is that rotation happens randomly. It doesn't. It happens because capital chases efficiency. Ethereum is an incredible platform, but when it comes to moving money fast, cheap, globally, and compliantly, XRP simply performs better. Settlements that take minutes or hours elsewhere are completed in seconds on the XRP ledger. That level of precision is what major financial players notice when they evaluate technology for scaling real-world finance. You can see it in how the conversation on institutional panels is changing. A year ago, discussions were centered on getting exposure to blockchain. Now the talk is about settlement efficiency, liquidity corridors, and interoperability. XRP is built around those very topics. The next wave of adoption won't be about who has the most decentralized apps. It'll be about who can handle the largest volumes of real money moving between jurisdictions. Ethereum will continue leading the tokenization narrative. It's a necessary step in the evolution, but the settlement layer that actually finalizes those tokenized transactions needs to be fast, stable, and cost-effective. That's the role XRP was engineered to play. As more tokenized assets come online, from money market funds to real estate to corporate bonds, settlement becomes the next bottleneck. Whoever solves that bottleneck captures the next trillion in value. And that's exactly why Wall Street's rotation into XRP isn't a matter of if, but when. Once the data show that XRP's settlement infrastructure is ready to absorb large-scale liquidity without friction, the allocation models will adjust. Every major financial institution has teams watching these metrics: transaction throughput, ledger reliability, on-chain fees, and counterparty risk. XRP scores high across all of them. Meanwhile, the global macro environment is creating perfect conditions for this shift. Currencies are fragmenting, cross-border trade is growing, and instant settlement is becoming mandatory. The world's financial grid is being upgraded in real time, and it's happening faster than most realize. Banks, fintechs, and even governments are testing infrastructure that runs on or connects to Riplet. Once they go live at scale, XRP becomes the default lubricant of global liquidity. That's what makes this rotation different from previous ones. In earlier cycles, XRP rallies were largely speculative, driven by investor excitement and momentum. This time, it's fundamental. It's underpinned by real transactions, actual demand, and structural adoption. So when capital starts rotating from Ethereum's rally peak into XRP, it won't just cause a price pop. It could ignite a sustained multi-phase run. Every liquidity cycle in crypto follows the same blueprint: dominance, distribution, and redirection. Bitcoin led, then Ethereum took the spotlight. The next redirection is already being set up. XRP sits right at the intersection of technology, compliance, and scalability. The three traits institutions require before committing serious capital, and that capital is bigger than anything retail has ever seen. Just look at how fast institutional exposure has grown since the ETF approvals. Trillions in managed assets can now flow into digital markets with a single allocation adjustment. When those same funds decide to diversify into XRP-based products, the effect could be instantaneous. We're not talking about a slow, gradual shift. We're talking about liquidity moving in waves measured in billions per day. And here's the part that most investors underestimate. Rotations aren't polite. They don't warn you before they start. They happen when attention is elsewhere. When most people still think the current leader will keep running. Then suddenly volume spikes in the next asset. Algorithms chase momentum. Media coverage flips, and within days, the narrative has changed completely. XRP has been the quiet player, but that quiet phase never lasts forever. Right now, Ethereum is nearing what looks like the early stages of that transition. Price action remains strong, but momentum indicators are flattening. Traders are locking in profits, funds are lightening exposure, and XRP's chart is coiling tightly. Historically, the exact setup that precedes explosive moves. The ingredients are aligning: narrative fatigue on ETH, legal and technical clarity on XRP, macro tailwinds from global payment upgrades, and a probable ETF trigger in the near term. The beauty of this moment is that the two assets don't compete. They complement. Ethereum builds the infrastructure. XRP powers the settlement. Together, they form the backbone of a new financial system. But the capital cycle always moves from the established leader to the emerging performer. Ethereum has already had its run. The next chapter belongs to XRP. The next time you see ETH dominance rolling over on the charts, remember that it's not just a random market shift. It's the start of liquidity migration. That's when XRP's fundamentals meet momentum. That's when the market realizes where the real efficiency lies. That's when the price action stops moving in percentages and starts moving in multiples. And it can happen fast, faster than anyone expects. Because unlike the older cycles, this market doesn't sleep. It's global, algorithmic, and connected across every exchange and trading pair. When the signal fires, rotation will be instant. That's why preparation is everything. The setup is here, the players are ready, and the stage is massive. The cycle is repeating, but this time the spotlight is on XRP. And if you're ready to understand how to position yourself before that moment hits, before that liquidity wave floods in, go check out the XRP Millionaire Blueprint in the pinned comment below this video. It lays out the exact system, visuals, and strategy behind everything that's unfolding right now, showing you how top investors prepare before the next rotation begins. It's all waiting for you right there in the pinned comment.